Hi everyone, it's Amit. So we're about 15 days out from 2021, and it's time now for everyone to start evaluating and determining what are their 2021 financial goals going to be. So what better way in terms of determining your financial goals than to see what have other successful people or uber successful people done to achieve where they are currently in life, right? So what were their goals when they were going through their wealth building journey? So I want to cover off on that in this video, and I think we can take some of those lessons learned, apply them to our own personal finances, and effectively, maybe at some point in the future, achieve where they are in their financial journey. So I've come up with about 4 goals, and then I've got a bonus goal which I'll cover off in the end, so definitely stick around for that. This is a personal finance channel with the goal of expanding the beginner's financial acumen, and of course, so that they can make better financial choices. So if that sounds something that is interesting to you, hit the subscribe button, and let's get into it. So the first goal by far, and most important, is for people to start building their emergency fund. So we're talking about a 3 to 6 month emergency fund. If you're somebody who makes a higher income or a high income individual, we're talking about over $250,000, it's more recommended to have a 6 to 9 month emergency fund because obviously your income is generally harder to replace. That's one thing. And the second thing is your expenses are also higher. When it comes to your emergency fund, you need to be prepared, right? There's no other way of saying this. And this is one of the things that we've learned in 2020. There's a fair bit of uncertainty out there. Nobody expected the events that we went through, right? And people experienced job losses. People experienced a variety of different unforeseen and unfortunate circumstances which they're navigating through, right? So 3 to 6 month emergency fund is like table stakes, right? Without it, we cannot move to any of our other financial goals. According to a research done by CNBC, only 41% of people can basically accommodate a $1,000 emergency. And you're going to have things that just randomly come up, right? If it's not a global healthcare crisis, your car may have issues, right? You may have some personal health problems, whatever it might be. It's going to require a certain amount of funding, right? And that's what the emergency fund is intended to effectively cover. So the first goal, build that 3 to 6 month emergency fund out. In order to determine how to build that 3 to 6 month emergency fund, the best way to do it is take into account what your expenses are for your needs, right? Not any of your wants, your needs, and then multiply it by 3 or 6 such that you can basically arrive at what that number is. When you have those funds, take those funds and put it in a high-yielding checking account, right? So you can use one of your credit unions, which is highly recommended because they usually offer the highest rates. Now, if you don't want to use that, you can obviously use a Capital One 360 account or an Ally Bank account. They generally provide some of the highest yielding rates as well. There may be higher yields that are out there, but Ally, Capital One 360, they have sustainably been providing a pretty good yield for these checking accounts. They have an online presence. It takes 1 or 2 days to get the money out from them, but for all intents and purposes, it's better to get some kind of a yield on it than getting nothing that you would have, say, for example, on a JP Morgan Chase checking account. The second goal, which we recommend for 2021, is settle up on your credit card and student loan debts. I know there's a fair bit of optimism out there that, we've got new leadership in the White House, and that new leadership will hopefully result in a wiping out of people's student loan debts. I know people are holding on to that pretty aggressively. My recommendation, at least when it comes to something like that, is let's not hang our hats on it, right? Let's not just effectively assume that the government is going to solve all of our problems. I think just about at every election cycle, something comes up, right, around student loans and how it's so high and so crazy, and people need to, figure out ways to, or it's a government problem, the government needs to resolve these issues, and so on and so forth. But, I don't think it's something that we can hang our hat on. There's going to be a fair bit of, politicking, if that's a real word, I'm not sure, right? But there's a fair bit of, discussions that need to be happening between various political bodies as well as, banks and institutions and all of that in terms of determining, what is it that can be done from a student loan perspective. So I wouldn't hang my hat on it. When it comes to credit cards, there's 2 ways of approaching this particular problem, right? There's, the debt snowball, I guess is a term that people use, and then there's also the debt avalanche approach, right? So there's 2 of these approaches that people suggest. One of them is more touchy-feely, right, which is the debt snowball approach, and the other one is for the more mathematically inclined, right, because it makes more sense in that manner, and that's the debt avalanche approach. What the debt snowball approach basically says is take care of your small debts first and get rid of them as quickly as possible, and that will drive some level of confidence for you, right? So you'll be more confident and go after your higher debts, but you'll have some level of a success rate that you're trying to mimic as we go into some of the higher or larger balance debt that you may have. Now, the debt avalanche approach, as I mentioned, is for the more mathematically inclined, which says, hey, go after the biggest debt, right? You're probably paying the most wasteful interest on that bigger debt, and therefore try to get those out of the way and then move for the itty bitty ones. And that's basically the debt avalanche approach, right? So at least from my perspective, I don't care. It doesn't matter, right? Just start somewhere, right? Just start picking the smaller debts, or you pick the larger debts, whatever it is. Just start making progress on your debts, because once you have those cleared out, then you can move on to actually growing your money through investments. And that's the third goal, which is basically shoring up your retirement accounts. So when it comes to retirement accounts, right, I've got a different video on this which talks about best investment options, and I'll include a link for that particular video below. But if you're working at with an employer, they may have a 401k plan. If they don't have a 401k plan, there's IRAs that are out there. 401ks plans have a maximum contribution limit of, I think, 19,500. IRAs have a maximum contribution limit of 6,000. And in an ideal scenario or an ideal situation, you want to max them both out, right? If you max both of those out over the course of your career, you'll have millions available for retirement when you turn 65. But if you cannot do that, because I fully understand that most people are not going to be in a situation where they can put in that much money towards retirement, so what they would do is at least put 20% of your income towards retirement. It's very important to also automate this as much as possible, right? So that you're not thinking about it, right? The money's just automatically coming out of your account. You don't have any visibility into it. You don't have that need to spend because the money is gone, right? So that's what we suggest is automating as much of this as possible and focusing on a diversified portfolio when it comes to investing towards your retirement. When I say diversified portfolio, you can pick like an S&P 500 index, which is usually good enough for most people in terms of realizing this yield. After that, in terms of like a fourth goal, what I highly recommend is people look for additional sources of income. Okay. And I'm not saying that, hey, in 2021, you need to go out there and just create like hundreds of thousands of dollars. I mean, if you can do that, that's absolutely terrific. But at least what I'm talking about is just planting the seeds, right? So plant some seeds on things that you can do which may potentially result in the future of creating more income for you. And if you can do that, and maybe you can be successful at doing that over 1, 2, 3, 5 years, whatever it might be, right? It could definitely be accretive to your portfolio. So figure out ways to figure out more income, right? So I know there's tons of other videos out there available on YouTube, right? That talks about, these are various side hustles or side gigs. These are the most lucrative ones, and so on and so forth. I was thinking about, talking about that a bit in this video, or potentially developing a second video around it, and then I decided not to. And the reason for that is simple, right? The things that you want to do, your side income or your side hustle or your side gig, whatever term it is, right? It really depends on you. It depends on what are you interested in, right? Just because we may list out a whole bunch of lucrative side gigs, none of them may actually strike your fancy. And then it becomes like more work, right? One of the intent of side gigs is to essentially do something that you actually enjoy, such that it's not more work. And if it's not more work, it'll be more sustainable, right? And that's kind of like the objective here. So find something that you like. Don't necessarily go out and create all this money out of it. If you can, that's great, but you don't necessarily have to. Just start planting the seeds, and maybe in the future, you may actually have something significant or meaningful that comes out of it. And as I said, I do have a fifth goal as well, right? And this is it's kind of like a bonus goal, but it's not so much in the financial realm, right? It's more just broadly speaking that take care of yourself. Take care of your health, right? Without your physical health and your mental health, money effectively has no value, right? Money in itself is just a tool. It can compound things, it can make things better, it can enhance your quality of life. But if you don't have your physical health, if you don't have your mental health, or you're struggling in some areas associated with that, it's going to be a challenge. So now I'm not saying that, hey, come 2021, everyone runs out and gets a gym membership, right? I think there's plenty of research and plenty of studies that show that, hey, you get one of those memberships, by the end of January, right, you've given up on any of those goals. And I'm not going to go too much into that, right? But I think generally speaking, what I'd say is do things that you like, right? If you like walking around, if you like running, if you like meditating, if you like yoga, whatever, just do it. Just do something, right? If it'll enhance your physical health, it'll enhance your mental health. And of course, if it's free, so it's not going through a gym membership and things like that, it's absolutely going to be beneficial towards having good and robust faculties such that you can enjoy your money as it effectively grows into the future. So those are it, right? So those are the 5 goals that I would recommend, right? Which is basically your 3 to 6 month emergency fund, paying off your credit card, student loan debt, then moving and maximizing your retirement portfolio, trying to put at least 20% of your income into that. If you're making a lot of money, then even put more than that, put 30% of it into your retirement account through various options that are out there, right? Fourthly, obviously, is look for additional sources of income, right? Side hustles, things that you're interested in, things that you want to actually participate in that may result in incremental cash flow in the future. And then the last thing is obviously take care of your physical and your mental faculties such that you're able to utilize and enjoy your money as it grows into the future. So I hope you enjoyed the contents of this video. If you did, smash the thumbs up button and of course subscribe to the channel as well, and I will see you soon.